the price of silver did something few thought possible. It blew past its all-time highs, but briefly touching an insane $84 an ounce. Markets were instantly thrown into a panic. But this wasn't just a random bubble. This was the shockwave from a quiet, calculated decision made in Beijing. A decision that went into effect on January 1st, 2026, and fundamentally rewired the global balance of power. China didn't just buy silver. It effectively seized control of a massive portion of the world's refined silver exports, practically overnight. This isn't just a story about a metal getting more expensive. This is about a hidden war, fought not with missiles, but with resources and supply chains. It's about the weaponization of the one metal that has become the secret ingredient to pretty much everything. For years, the world assumed that critical materials like silver would just flow freely. On New Year's Day 2026, China shattered that assumption. Beijing has been watching, learning from its dominance in rare earths, and has now applied the exact same playbook to silver. The world is just now waking up to the fact that the rules have changed. And the country that controls the building blocks of the future, well, they control the future itself. Right now, Beijing has its hand on the switch. The new rules of the game. On January 1st, 2026, the global silver market got a brutal wake-up call. The old quota system that governed China's silver exports for decades, gone. In its place, Beijing rolled out a strict new export licensing framework. This wasn't some minor regulatory tweak. It was a total overhaul designed for one thing: control. From that day on, any company wanting to export silver from China had to deal with a new, complicated dual license system. But the real kicker is who is even allowed to apply. The Chinese Ministry of Commerce dropped a list of just 44 companies approved to even be considered for a license. Getting on that list is next to impossible for an outsider. A company has to prove it produces at least 80 metric tons of silver a year and has credit lines over $30 million. These rules basically wipe out any smaller producers or independent traders, concentrating China's entire export power into the hands of a few massive, state-friendly giants. Now you have to understand the scale here. Early reports were screaming that China now controls 60 to 70% of the entire global silver supply. That's a huge exaggeration of the total market, but it points to a more subtle truth. China's real power is in refining. The country's business model has always been to import raw ore from around the world, refine it into high-purity silver, and then export the finished product. This new system gives Beijing an iron grip on that critical link in the chain. While it might only directly affect about 7 to 10% of the total annual global supply, it's the marginal supply that sets prices and keeps the market from breaking. By choking off this crucial flow, Beijing has given itself a powerful weapon. An inside source even noted that these new controls signal silver's promotion to a national strategic resource, managed with the same seriousness as rare earths. This isn't just about managing a resource anymore. It's about using it as a tool in the economic fight with the West. The message couldn't be clearer. The free-for-all is over. Access to Chinese silver is now a privilege, not a right. The firestorm in the markets. The market's reaction wasn't just fast, it was explosive. The moment traders realized what China was doing, a tidal wave of panic buying swept the globe. In the final weeks of December 2025, anticipating the January 1st change, silver prices shot skyward. The chaos peaked on December 29th, when spot prices briefly rocketed past $80, hitting that intraday high of $84 an ounce. But the real frenzy was happening inside China itself. A speculative mania took hold of the country's retail investors, creating a massive bubble in the domestic market. The situation got so out of hand that the government had to step in. The Shanghai Futures Exchange jacked up margin requirements on silver futures contracts, a classic move to make it more expensive to speculate and try to flush some of the wild gambling out of the system. That move finally pricked the bubble. Prices plunged, and silver pulled back from its $84 peak into the $70 to $73 range. But the volatility was just staggering. This entire chaotic mess, the record price spike, the retail mania, and the government intervention was a direct result of Beijing's policy. It showed a market teetering on a knife's edge, where one strategic move could unleash global panic and reveal just how fragile the whole system really is. The world was forced to see that silver was no longer just a commodity. It had become a battlefield. This is the new economic reality, where a policy memo in Beijing can instantly threaten the supply chains we all depend on. Understanding these moves is more critical than ever. If you're getting value from this breakdown and want to stay ahead of the next global economic shockwave, make sure you hit that subscribe button. And let me know in the comments, what other commodity do you think is next on the chopping block? Now let's get back to the core of this. Why is silver so important? Why silver? The industrial choke point. For centuries, silver was known as the poor man's gold, a monetary metal. That identity completely misses the point today. Silver's primary role isn't in coins. It's an irreplaceable industrial workhorse. It is the single most electrically conductive element on the planet, which makes it absolutely essential to the technologies that define our world. This is exactly why Beijing's move is so powerful. It's a chokehold on the raw material of the future. The first and most critical battleground is solar power. China produces over 80% of the world's solar panels, and every single one of them needs silver. The metal is used in a paste that captures the electrons generated by sunlight. While the amount per cell is tiny, the sheer scale of production is astronomical. In 2024, the solar industry devoured nearly 30% of all industrial silver demand. With the world pushing for green energy, that demand is set to explode. By restricting exports, Beijing is basically telling the world, we get our silver first. The second choke point is the electric vehicle revolution. Every EV contains between 25 and 50 grams of silver, way more than a gas-powered car. It's used in battery connections, charging points, and all the complex circuitry. As the world's biggest producer of EVs, China's own need for silver is going vertical. The math is simple. More EVs means more silver, and China plans to build more EVs than anyone. Beyond those two giants, silver is critical in almost every piece of electronics: the phone in your pocket, the laptop on your desk, the servers that run the cloud. A huge and often overlooked area is artificial intelligence. AI requires massive data centers packed with hardware that all relies on silver's conductivity. For 5 years straight, global silver demand has been higher than the supply for mining and recycling, creating a massive structural deficit. Inventories in major vaults in London and Shanghai are at or near rock bottom. It's into this already tight market that China threw its wrench. They didn't need to create a shortage. One already existed. All they had to do was squeeze the supply to turn a market problem into a strategic weapon: the geopolitical game board. China's move on silver wasn't random. It was a direct counterpunch in an escalating economic war with the United States. To understand why Beijing did this, you have to look at what Washington did just a few weeks earlier. In late 2025, the US government officially added silver to its critical minerals list. That designation is for materials essential for national security that are vulnerable to supply chain disruptions. For the first time, the US government formally recognized silver as a strategic asset. To Beijing, this was a clear threat, an American attempt to secure its own supply chains for the very technologies China dominates. Beijing's response, effective January 1st, was fast and brutal, applying its own strategic label and using its market power to turn America's fear of a supply disruption into a reality. The shockwaves hit global industries immediately. Industrial consumers, especially in manufacturing hubs like South Korea, were suddenly cut off from a primary source of refined silver. This has forced companies across the West to scramble for alternative suppliers, paying enormous premiums for physical delivery. It has created a stunning split in the market. While the paper price of silver on an exchange might say one thing, the price to get actual physical bars delivered to your factory is way higher. Buyers are reportedly paying premiums of $8 or more per ounce just to secure metal from anywhere but China. This is weaponized interdependence in action. China took a product the world needs, made itself the dominant refiner, and is now using that control as a bargaining chip. The move is forcing every country and company to rethink their supply chains and question their reliance on a single nation for critical materials. The game board has been redrawn, and silver is now a queen on the board. The world fights back. But the world isn't just sitting there and taking it. While the first reaction was panic, the response is now shifting to adaptation and innovation. A global race is on to break free from this dependency, and the front line is the solar industry. For years, manufacturers have tried to reduce the amount of silver in solar cells, a process called thrifting. But with silver recently making up a huge chunk of a solar panel's cost, thrifting isn't enough anymore. The crisis has forced a more radical solution: substitution. Chinese solar giants themselves are leading the charge. Companies like LONGi Green Energy have announced they are speeding up plans to replace expensive silver with cheap, abundant copper in their solar cells. This is a massive technological pivot. By using electroplated copper, manufacturers could potentially break free from the volatile precious metals market. This is not an easy fix, though. The switch is technically difficult and expensive, requiring huge changes to factories and manufacturing lines. Experts estimate a full industry-wide transition could take more than 4 years. So while copper offers a long-term escape hatch, it does nothing to solve the immediate crisis. In the short term, the fight is just about getting your hands on any physical silver you can find outside of China. Nations are looking at their strategic stockpiles, and industrial buyers are in a bidding war for supply from countries like Mexico and Peru. It's a desperate, expensive holding action. Companies and governments are paying a fortune today to buy themselves time, praying that breakthroughs like copper-based solar cells will eventually offer a permanent way out. The silver crisis has triggered the global market's immune system, but this fever is going to last for years. What we've seen since January 1st, 2026 is a fundamental shift in the global order. China's decision to lock down its silver exports wasn't just a trade policy. It was a masterclass in economic warfare. It was a quiet, bureaucratic move that set off an explosion, showing the world how controlling one small piece of the supply chain can give you immense global power. This wasn't an all-out ban, but something much smarter. It was a strategic squeeze on a critical commodity at its moment of maximum vulnerability, a time of record demand and a massive supply deficit that has been building for years. The implications are clear. First, silver is no longer just an industrial metal. It's a strategic asset in the global race for technology, right up there with semiconductors and rare earths. Its role in solar, EVs, and AI makes it non-negotiable. Second, the world is facing a severe and long-term silver shortage. China's actions just turned a chronic illness into a critical emergency, which means prices are likely to stay high and volatile as industrial needs clash with geopolitics. And finally, this marks a huge acceleration of the great economic decoupling. The age of assuming you could always buy what you needed on the open market is over. Oh, supply chain security now trumps efficiency. China learned from its dominance in rare earths and has now pulled the same move on a much bigger, more visible market. The world has been warned, and it leaves us with one unsettling question. Was this the first shot in a new, quiet silver war? And what will they weaponize next?